Happy Sunday, everyone. It is April 20th, 2026, and welcome back to the MySG Prop Podcast. I am Rainey, and I am joined as always by the man with all the numbers, CS.
Glad to be here, Rainey. Today we are diving into the weekly update, specifically looking at the market pulse for the week of April 13th to 19th. And honestly, looking at the data, the Singapore property market is acting like it has a mind of its own.
Right? I mean, every time I think things might settle down, I see another headline that makes my jaw drop. Like, I was reading about Yishun earlier. Did you see that HOI Hup Realty just snapped up a new executive condominium site?
Oh, they did not just snap it up. They went in with a bid of $732 per square foot per plot ratio. That is a bold move, especially when you look at the broader economic climate.
Wait, 732? It sounds like a lot of confidence. Why are they so bullish?
Whoa, look at the trends. Developer sales actually hit a 5-month high in March, with about 1,300 units sold. It is that classic safe haven mentality. Even with all the noise coming from the Middle East and global instability, people still see Singapore as the gold standard for stability.
I guess that makes sense. It is like, when the world gets crazy, just buy a brick in Singapore and sleep soundly. But wait, is it just homes? Because I saw something about office spaces too.
That is actually the more shocking part. Grade A office rents hit a 17-year high in the first quarter. 17 years, Rainey. We are talking about levels we have not seen since, the mid-2000s?
17 years! That is insane. I thought everyone was working from home in their pajamas forever. Did the pajamas phase just end?
Well, sort of. It is a supply and demand game. Supply is tight, companies are pushing people back to the office, and suddenly, prime space is like gold. If you are a commercial landlord right now, you are probably having a very good year.
I am definitely not a commercial landlord, so I will just be jealous from the sidelines. But let us talk about the stuff we can actually buy. Like, if I am looking for a new launch, what is the buzz? I keep hearing about Hudson Place.
Hudson Place is definitely the one everyone is whispering about. Their Versus VIP preview is coming up from May 1st to May 12th. If you are even thinking about it, you have to book a slot now, otherwise you will be stuck at the back of the queue.
Ugh, I hate queues. But what if I cannot wait until 2027 or 2028? I want something I can actually move into soon.
Then you should be looking at Sora. It is estimated to hit the Temporary Occupation Permit, or TOP, by the fourth quarter of 2027. They are down to the final few units. They only have 5 2-bedroom units left starting at $1,670,000 and 4 3-bedroom units from $2,130,000.
And for the big families? Or the people who just really like big bathrooms?
They have a 4-bedroom option at $3,250,000. It is moving fast, though. The window of opportunity is closing.
It always feels like it is closing. Now you know I have a thing for freehold. There's just something about knowing the land is yours forever. Anything in that department?
Actually, yes. Meyer Blue in District 15. They are offering up to a 9% discount right now. They have a final release of the 4-bedroom premium units, about 1,518 square feet, for $4,480,000.
9% off. That is a decent chunk of change. And District 15, I'm imagining the sea breeze and the city views?
Exactly. It is a total lifestyle play. You get the dual sea and city views. It is less about the math and more about the prestige.
I love it when the math is just a little bit lower. Now let us pivot to the resale market. I saw a listing for Park Clematis in Clementi that looked interesting.
Ah, the Clementi crowd. There is a 2-bedroom unit there, 689 square feet, listed for $1,360,000. The real draw there is that it is pool-facing with an unblocked view.
Oh, unblocked views are a luxury in Singapore. If you can see something other than your neighbor's laundry, it is a win.
Precisely. That is why it is trending. But if you are looking for something completely different, maybe for pure investment yield, you might want to look across the border.
You mean JB? I have heard people talking about the RTS link and everything.
Right. There is a hotel-inspired service residence in the JB City Center. 3-bedroom units are going for around the $500,000 range in Singapore dollars.
Wait, $500,000 for a 3-bedroom? That sounds almost too good to be true.
That is where the smart money is looking for yield. It is a different risk profile than Singapore, obviously, but for the price, the potential rental return can be quite attractive.
It is a bit of a gamble, but a $500,000 gamble sounds more my speed than a $4 million one. So looking at everything we just talked about, From the S26Es to the JB condos. What is the actual takeaway here?
The takeaway is that the market is incredibly resilient. We have economic headwinds, we have global tension, but the numbers do not lie. Whether it is the 17-year high in office rents or the peak in developer sales, Singapore is still the place to be. The opportunities are there, but the pace is just fast.
So basically, if you see something you like, do not overthink it for 3 months or it will be gone.
Precisely, which is why I always say, do not try to navigate this alone. Get in touch with the experts at Hutton's TTT, whether you are buying, selling, or just trying to figure out where to put your money. Professional guidance is key.
Well, that is all for today's podcast from my SG Prop. I hope you picked up something useful for your next property move. If you enjoyed this, do not forget to follow or share this episode with your friends who are obsessed with real estate.
More insights and new launch updates are always waiting for you at mysgprop.com.
Catch you next time.